Hello and welcome. This is the third lesson on public finance. And today, our learning outcomes are by the end of the lesson, the learner should be able to classify tax according to the impact on the taxpayer. Now, the first classification is according to the impact on the taxpayer. And the first type of tax is called direct tax. Now, it is direct if impact and incident of the tax are on the same person. It is based on incomes, profits, properties, and companies. It includes personal income tax. This is tax imposed on income of individual. It is progressive. For example, pay as you earn. That is into brackets, payee. Corporation tax. This is tax levied on profits of companies. Stamp duty. It is paid when conveying of lands or securities from one person to another. Estate or death duty. It is tax imposed on properties transferred after owner's death. Also, we have wealth tax. This is tax levied on personal wealth that goes above a certain limit. Capital gain tax. It is tax levied on capital gains, fixed assets or security being sold at higher price than the book value. Then we have capital transfer or gift tax. It is levied on value of properties transferred from one person to another. What are the merits of indirect tax? It is economical in collection. For example, we have payee, which is deducted at the end of every month on salaries. So it becomes economical to collect. Yields from tax are certain and can be calculated in advance. Equitable. It ensures there is fairness in tax distribution. And also, it doesn't affect the price of goods and services. And it brings the distribution of wealth. Another merit of indirect tax, of direct tax, is that the society becomes conscious and keep about public expenditure. Direct tax is simple to understand. It is desirable as it affects people who fall within the jurisdiction of income tax and corporation tax. Also, direct tax is flexible and can be expanded to cover as many areas as desired. Also, we have demerits of indirect tax. What are the demerits of direct tax? Tax can be easily be evaded. Direct tax can be easily evaded. It reduces people's ability to save, and high rates may deter people from working harder. Then, heavy taxation on profits may deter enterprises from investing because the more you earn income as profit, the more you pay tax. It may be inconvenient to pay if computation and payment of tax is complicated formalities and not imposed on all citizens, as low income earners don't fall on the tax bracket. Let us look at indirect tax. This is a type of tax whereby the person on whom it is initially imposed may not shoulder the whole tax burden, but may shift the whole or part of it to someone else. For example, we have sales tax. And this one is based on sales made, but it has been replaced by VAT, that is value added tax. And this value added tax, or VAT, it is levied on the value that a business adds to a product. For example, if an item costs 3,000 shillings and it is sold at 4,000 shillings, VAT would be paid on 1,000 profit. That is the value added. So if VAT is 18%, then VAT would be 18% of 1,000 gained, and that is 180 shillings. And similarly, if a wholesaler sold it at 6,000, from 4,000 to 6,000, then the profit there is, or the value added is 2,000, then it will be 18%, assuming VAT is 18% of 2,000, which is 360. Now, if the retailer sells the same item at 9,000, then the wholesaler's VAT will be 18% of 3,000. That is 540. So total VAT of that particular product will be 180 of the producer, 360 of the wholesaler, and 540 of the retailer, and it will be 1,080 shillings. Export duty. This is a tax levied on imports. So when you are exporting, when you are exporting items, you pay tax which is called export duty. And this aims to raise the government revenue or discourage exportation of a certain commodity. So if the government wants to discourage exportation of a certain commodity, it raises the export duty. Import duty, it is charged on goods imported. And what is the purpose of import duty? Its purpose is, one, to raise government revenue, to reduce dumping of foreign products in our country, and to discourage consumption of imported goods. Then we have excise duty. This tax levied on goods manufactured and sold within a country. So what is the purpose of excise duty? Number one, to raise government revenue. Number two, to discourage consumption of some commodities, for example, beer and cigarettes. Now let us look at the merits of indirect tax. It can be used selectively, that is, as we have seen, to discourage consumption or importation or exportation of some commodities. Payment is voluntary. It is not possible to evade. Another merit is stimulates people's effort to remain in the standard of living. It yields more revenue. It is convenient as it is paid in small bits as one buys the commodity. It is flexible as it enables the government to either raise or reduce tax. It may increase inflation, that is the merits of indirect tax. It may increase inflation because of the increase in prices. It falls more on consumers with low incomes. It can be avoided by those who do not consume taxed commodity. It may increase price of taxed commodities. And also, it cannot predict, the government cannot predict the amount of revenue yield, and it is hidden in high prices, and therefore contributors are not aware of it. And lastly, the merits of indirect tax. It is expensive to collect as many tax inspectors are employed. That is the end of our last bit on public finance. Thank you.